Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis and joining me is Senior Investment Analyst Rafi Boyajan. We'll be discussing the Reserve Bank of New Zealand's upcoming meeting and the outlook for the kiwi. So Rafi, given that there hasn't been a notable rebound in economic activity in New Zealand over the past few months, do you think that the Reserve Bank of New Zealand is likely to cut rates on Wednesday for the third time this year?
Well, the consensus estimate is that they will cut interest rates by 25 basis points, but it is looking like it's going to be a very close call. Market odds for a rate cut have fallen from more than 80% to just 60% in recent weeks. The main reason for that is this renewed optimism of a trade deal between the US and China, a phase one trade deal, which has lifted some of the economic gloom for the global economy. But looking at the New Zealand economy specifically, the recent data has been fairly mixed. Inflation in the third quarter, although it was slightly above expectations, it was still stuck within the RBNZ's lower half of the 1 to 3% target band. The employment numbers pointed to increased slack in the third quarter, and that is also important because RBNZ has a dual mandate of inflation and employment. On a positive note, the ANZ Business Outlook Index did increase for the first time in October in 5 months, but that's still the number was still fairly quite close to a decade low. So we still had to get that convincing sign of a rebound, and that may just push the RBNZ to cut interest rates again on Wednesday.
I see. So bearing all this in mind, what's the outlook for the kiwi?
Well, you might say that the immediate risk for the New Zealand dollar is actually on the upside because if this trade optimism continues, even if they do cut rates in November, it's quite likely we're not going to get further cuts beyond that. So whether or not they go on pause in November or they cut and then they go on pause, that would be, and they signal as such that would be positive for the New Zealand dollar. So we should be paying close attention to their quarterly forecasts. Because if the RBNZ is a bit more positive about the growth outlook in New Zealand, then that would point to reduced chances of further monetary easing. On the other hand, looking at the more longer-term picture for the kiwi, it will be driven by a risk sentiment and mainly what happens to the US-China trade war. At the moment, a deal is looking very close, but of course that could fall apart at any point, and we could yet see another escalation in trade tensions, which would be negative for risk-sensitive currencies such as the kiwi.
Rafi, thanks so much for joining me, and thanks for watching at XM.com.